You've just received payment for your business services. But there's a problem. The check is made out to you personally, not your company. Can you simply deposit it into your business account? This seemingly simple question has significant legal and financial implications. Depositing a check made out to you instead of your company can raise serious red flags, particularly for corporations and multi-member LLCs. While sole proprietors face fewer restrictions, all business owners need to understand the potential consequences. Let's examine what happens when you try to deposit a personal check into a business account. First, the bank makes the final decision on whether this is allowed. Many banks will permit it if you properly endorse the check with your personal signature. Add a full endorsement under Pay to the order of, include your company's name, and add your standard business endorsement. However, even if your bank allows this practice, it doesn't mean it's advisable from a legal or accounting perspective. When you deposit personal checks into business accounts, you risk commingling funds, a practice that can have serious consequences. For sole proprietors, the distinction between personal and business finances is already somewhat blurred legally, but maintaining separation is still important for clean accounting and tax purposes. If you operate as an LLC or corporation, the stakes are much higher. One of the most significant risks is what legal experts call piercing the corporate veil. This occurs when courts set aside the limited liability protection of your business structure, potentially making you personally liable for business debts. Regular mixing of personal and business finances is one of the primary reasons courts pierce the corporate veil. From a tax perspective, depositing personal checks into business accounts creates documentation challenges. The IRS expects clear records showing the origin of all business income. Without proper documentation, these deposits might appear as undocumented income, triggering audit flags. So, what should you do when you receive a check in your name instead of your company's? The safest approach is to deposit the check into your personal account first, then transfer the funds to your business account with clear documentation. This creates a paper trail showing the money's purpose and origin. If the check was payment for business services but mistakenly made out to you, note this in your accounting records. Treat the transfer as either a capital contribution or loan to your business, depending on the circumstances. For multi-member LLCs, the situation becomes even more complicated. Depositing a check made out to the LLC into a personal account without authorization from other members could potentially be considered fraud. While banks may occasionally allow personal-to-business deposits, especially for sole proprietors, they're generally viewed with suspicion when done regularly. Some financial institutions have strict policies against such practices to prevent fraud and unauthorized transactions. The best practices for handling checks made out to you instead of your company include: deposit the check into your personal account, transfer the funds to your business with proper documentation, maintain clear records of the transaction's purpose, avoid frequent transfers between personal and business accounts, and consult with an accountant or attorney when in doubt. Remember, maintaining the separation between personal and business finances is fundamental to preserving limited liability protection and avoiding tax complications. What seems like a simple deposit could have far-reaching consequences for your business's legal and financial health. When in doubt, it's always better to follow the more formal route of depositing to your personal account first, then transferring to your business with documentation, rather than risking the complications that can arise from improper handling of checks.